Puri joins us, Chairman Anurag Group. And if I look at the headlines which are coming from Mumbai on prices of houses which are being sold at Worli Seaface, is that true? 2.5 lakh rupees per square foot, 2.8 lakh rupees per square foot, 3 lakhs and 5 bidders. And what's happening there?
Hi, Nikunj. Very good morning. It is true, those prices are true on the Worli sea face. But I do want to put a caveat is that that does not represent the overall market. These are very limited inventory in new developments on Worli sea face, as a result of which you are seeing these extraordinary prices. But for your viewers, I do want to put a caveat that it is not a representation of what's happening in the larger parts of Mumbai. Even if it means luxury in South Mumbai, it hasn't moved the way what we are seeing on just pure Worli sea face. So these are Nikunj, exceptional deals that have happened, which do not truly represent the market. But as far as the market is concerned, I must say is that luxury I thought was going to slow down, and it did appear from mid-February to, I would say, beginning of April. It did appear to me is that it was starting to slow down, whether it was the effect of economy or the sentiment or the stock market. But suddenly, from the beginning of April, it has come back and come back fiercely with a lot of the high net worth individuals still wanting to buy properties, still wanting to invest in the real estate.
If I speak to the listed large builders, Prestige, DLF, Max, even for that matter, Brigade, all of them are in a sense seems to be echoing that demand and pricing, they both are robust. Now, the general view expressed by firms like Anurag and others have been that demand will remain strong, but pricing will start coming under pressure. As a consumer, I think I'm unhappy, but as shareholder of real estate stocks, everyone is saying this is great. So where is the tide moving, both in terms of price and demand?
So demand continues to remain robust. That is absolutely correct. It is across all sectors. Whether it's mid-level, whether it's premium, whether it's luxury, affordable. Earlier on your show also I had said is that is where, because of limited supply, we're not seeing much sale improvement within the affordable section. But otherwise, mid-premium luxury continues to do very well. I continue to maintain as Anurag that the prices, what we had seen, Nikunj, over the last 3-4 years since COVID, the increase in those prices, you are not going to see that over the next 12 months. Our estimate is that the prices will continue to rise, but they will rise as per inflation rate, which will be more in the tune of 5 to 7% per annum. You're not going to see that robust increase in the price, which was between 12 to 20% per annum, depending on which city and which micro market you were. This is now going to be more 5 to 7% increase through the course of this financial year.
But Anuj, the recent headline, which talks about Mumbai's unsold luxury housing stock, which has seen an uptick of 36% in the first quarter. Tell me, how do you actually break down this data? Because is it a sign of oversupply, or do you think there's a temporary pause in demand?
As I had said earlier, that from mid-February to beginning of April, we did see that the luxury sales had started to drop. The footfalls at the sites had started to slow down. The buyers who were interested to buy had, extended negotiations and were slowing down their purchases. And that's what you're seeing in the last quarter of the last financial year, where we had seen that the inventory had started to build up. But since the beginning of April, it has come back quite strongly, as a result of which I'm not worried about the built-up inventory which is available for sale. But I must say is that under the redevelopment, what is coming up on the luxury market, whether that is from Bandra going up to South Mumbai, there is a lot of new stock under redevelopment, and that potentially can bring in an oversupply in years to come. But again, I would just put in an asterisk on that is that usually these society redevelopments do take much longer than what is initially predicted for them to be brought into the market. Issues with the societies, issues, getting in the approval, getting them vacated, and bringing the free sale area of the society into the market does take much longer than what initially may have planned. But if we were to just look at on paper, if all the developments that are slated for the society redevelopment and others come up into the market on the luxury sale, particularly in Bombay, then we will have a potential oversupply situation in years to come.
So, which is the next big Worli sea face in making, according to you?
I do feel is Worli still holds a lot of potential. It has become the center point of Bombay. It used to be more, South Bombay, the Nepean Road, Carmichael Road, that sort of an area. I do feel is that what is next in the making is the Worli belt. This is where all the good quality developers are coming, the luxury buildings are coming. Also, it has a lot more land mass. So you are able to do quality developments, which does have a gated community kind of a feeling. And that is what the luxury really is able to deliver. So I would look out for Worli as the next area. Worli Seaface is too much high priced at this point in time. I mean, admittedly, it has unrestricted view of the sea, and in Worli, you never know that the next door building can come up and block your view. But still, I would be more keen on Worli than on Worli Seaface.
All right, but Anuj, coming back to the point of the rise in the inventory, give us some sense that is this whole data on the rising unsold inventory for the luxury projects specifically related to Mumbai, or you're also seeing such scenarios shaping up in other metro cities as well?
In other metro cities other than NCR, and that is also largely restricted to Gurgaon, there is no other luxury across the board. So, Bangalore, Hyderabad, Pune, Chennai, etc., have very little luxury. Whatever comes up gets up lapped, at the time of the launch itself in those markets. So, really, truly, luxury in volume is in Mumbai, and hence the question that you ask is it across the board? It is limited only to Mumbai because, in true sense, the volumes that are coming up for luxury are only in Mumbai. The second part of the question is that, are we going to get into an oversupply situation? As I said, is that the completed inventory where we are not going to get into an oversupply situation. There isn't much completed unsold inventories. What is potentially there is on paper a lot more inventory coming up, largely because of the society redevelopment. Now, if these society redevelopments come up at the scheduled time that is being slated, then potentially we are going to get into an oversupply situation. But practically over the last 2-3 decades, I've seen is that it does even out because of issues of permissions, approvals, delays, etc. What is slated on paper does not actually come out at the same time.
If one is looking at investing in real estate in India, is it a good idea, or one should buy based on need rather than making real estate as an investment after the recent run-up? Should investment be bought only need-based as of now?
I have a very interesting question. I'll divide it into two parts. So, if you are, say, a high net worth investor and you're looking at annuity returns, then definitely real estate is an area. And within that real estate, I would say is offices. Offices doing exceptionally well. I mean, last calendar year, 80 million square feet of gross leasing, which was the best ever that India has seen in the last 75 years. So clearly office is doing an exceptional job. And if you were to look at an annuity rental income coming in, then that's where I would invest. I would still not invest in residential. And if you are a capital gains guy and you sort of want to invest money only for that reason, I would buy residential. But from an investment perspective, given what I said earlier, that the prices are only going to go up by 5 to 7%, I would, on the residential side, it doesn't make any sense as an investor to invest in residential for just a 5 to 7% gain. And the rental returns on residential are merely 2 to 3% per annum. So for an annuity income, I would definitely say is offices, or then you can invest in the REITs that have come up. But as a pure residential investor, not at all. It should be based on need.
Right, one wouldn't have anticipated this advice, but Anuj, thank you for so much for being candid. But just one last question: when you say if you're looking at invest in commercial or office spaces, is it Mumbai, Bangalore? Which city is looking like the hottest market?
All of them are very nice. My personal preference is Bangalore. I mean, I just love that city, love the leasing in that city. 1/3 of the total India leasing happens in Bangalore. And given the global capability centers who are coming into India, wanting to get into Bangalore, I mean, that's my city of choice.
Good to hear that. Anuj, thank you so much for your time and speaking with us today. Okay, let's now welcome on board Kunal Tayar, Senior Analyst.
If you like this video, then like, share and subscribe to ET Now.